Hey guys. Okay. Hey, so good morning. So yesterday you must have seen or heard about the new Fed increase in the basis points that ultimately increases the interest rate, and all that is in an effort to fight inflation. So let me tell you what that means to you. And I'm not an accountant. I'm not a CPA. I'm just an investor. I do have my education that covers some of that. So I will do my best in sharing how I can best interpret it in a way that then I can explain it to you. And hopefully I do a good job at it. But so yesterday the Fed increased the interest um, by another 75 basis points. Now basis points are is just a simpler way of saying interest or percentage, but we use basis points to avoid ambiguity and confusion. One basis point would be 0.01%. So if doing the math, 100 basis points would essentially be 1%. Yesterday's increase was just three quarters of a 1%. So that's what a basis point is. And so why are they doing this? Well, the reason why they're doing this is because that is the Federal Reserve's best tool to fight inflation. And in essence, there's a lot of money movement. The velocity of spending has increased. The demand has surged for many things, while the supply has stayed stagnant or decreased in some cases. Or just not able to supply. So by increasing the interest, the yield, the basis points every single time, and the interest rates for the economy as a whole, essentially what they're doing is they're trying to stop us or slow us down from spending, and not necessarily directing it straight to us. But what they're doing is all the financial institutions, all the banks, the lenders that fund the growth, the economy, the banks that they lend you to go buy a car, the banks that lend you to start a business, the banks that lend you for a personal expenditure, and even to buy a house for a mortgage. So two things that they do is increase the rate, and sometimes it can also increase the reserves required by a bank. In essence, saying, hey, you know what? If your bank XYZ, last quarter you were okay holding, let's say per franchise per location, let's say $100 million, right? $20 million, $10 million, $5 million, depending on the branch. Now you have to have, let's say, an increase of 3% more, 5% more from margin off of the total that you have in operations for that particular bank. So obviously, the more reserves the bank needs, the less they have to play with from the money we deposit, the payments, etc. The less that they have available to then turn around and make it useful to play with it, reinvest it, lend it, etc. in exchange for that profit through interest rate. So by increasing the basis points, increasing the interest rate, the Federal Reserve is essentially asking us or forcing us to slow down. During the pandemic, there were a lot of people trying to buy houses, and there were a lot of people trying to buy cars. I don't think I understand why the car demand surged so much, but there was so much demand that manufacturers just couldn't keep up, especially then with a lot of employees taking advantage of the temporary laws and all that. Many people didn't go back to work, didn't show up, even if they were considered essential. So with that said, you have a lot of demand for cars, you have a lot of demand for houses, and builders and car manufacturers that depend on, for example, technology, microchips, that depend on tires, that depend, etc. They couldn't supply, and that's why you had the cars go up in value and lots in the dealerships empty. With the houses, it was the exact same thing. And so with the such high demand and the low supply, there's that gap that the government has to kind of help control, I guess. When it comes to the real estate, they can't just step in and bail out mortgage companies again. They can't step out and say, hey, you know what, you're a builder, you're the largest builder in the U.S. Here's more money, here's special provisions that maybe you can take advantage for now, so that you can accelerate that supply to the market. People were moving, buying houses, etc. So why are they raising the interest rate so much now? Well, in short answer is because they were late. During the pandemic, they couldn't double Amazon with COVID restrictions, the stipends, and then at the same time saying here's money so that you can survive to the people that needed it, while we're also going to increase the rates to make your the money that we just gave you worth even less. That would come later. So they're 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 increasing the rates so much so fast, because the inflation, the prices are just getting out of control, and they started late. I mean, as simple as that. Right now we have, as they were saying, we have a record low in unemployment. So it's a record low, but at the same time we have a record low in supply for the within the people that are actually looking for certain types of jobs, while the job openings continue to increase at a mass, and we have record high needs for employees, while unemployment is low. Is not because there's that gap smaller, but the reason why unemployment is low is because less and less there's less more and more, I'm sorry, there's less people looking for work right now. So the government only counts people that are actively out there looking for work. As I have mentioned in some videos in the past, banks are not going to, or I'm sorry, not banks, vendors, companies, restaurants, etc. They're not going to reduce the prices eventually. So the Fed has to step in and essentially force us to slow down our spending, so that companies that are providing whatever services, whatever products, whatever properties, mortgages, not necessarily the properties themselves, but the mortgages for the properties, so that they get stricter, they lend less, and essentially forcing the builders, for example, to hopefully reduce the prices of their homes, right? So while inflation is high, if you're looking to buy, for example, you may think, okay, well, inflation's high, it's expected to get worse. I'm renting right now. Should I use the little money that I have saved up and like, I don't know, keep my just put it under the mattress, thinking that my money is safe? Well, let me tell you, and the reason why I wanted to make this quick video is to let you know that you should be doing the opposite. The historically speaking, the best thing for you to do when you are facing impending inflation, the way they're talking about, is by investing. And I'm not talking like, hey, you have a house and you have, some discretionary money that you can play with, invest, and put at risk. I'm saying if you are renting, if you are a family already dealing with high increased rent, but you do have some money, you may be able to qualify. Right now is probably the best time for you to do it, because again, the best thing to fight inflation is to invest. If you have inflation right now, I think it's like 8.3, 8.4, maybe a little bit more now, as far as the like percentage of like how quick inflation is rising. 8 versus 2, which is the ideal. It's a huge number. So the best way for you to fight that inflation is by you getting into that wave, becoming a homeowner, and then start building that equity on your house, and as a foundation, as a way for you to fight inflation in a passive way, right? If you are in the position where maybe you can buy an investment property and you have a house and you want to rent another, that would definitely be the best thing that you could probably do right now, because you buy a property, you get a little bit of income, and that income that you get every single month, may stay steady, but your renter, your tenant, will pay down the mortgage, increasing and then as the value of the property increases, you're gonna have that big gap of equity money sitting in your property that you've bought. So your home will be making you some passive wealth. A lot of people talk about passive income. A lot of people talk about return on investment through cash, but it's not always about the cash. A property is an asset that you can refinance for as long as you have it, as long as there's equity and there's value in there, you can continue to refinance little by little over time. So it would essentially be making you money. Now, if you are sitting in a house that has a lot of equity and you think that you're golden, let me tell you that again, you're not. Your property is making you money that is just sitting there, right? So even though it's not necessarily losing value because it's keeping up or hopefully exceeding inflation rates, right? It's still just sitting there. So why not take it out or sell it, depending on what kind of property it is that you have, refinancing, sell it, and then go buy another property. And so essentially what you're doing is you're taking the asset, the 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 soft cash that you have from one property, taking it out, putting it into another property. Now you have two properties making you passive wealth, right? And that's a way for you to fight inflation. If push comes to shove and the economy gets worse, guess what? You're set. You can refinance your home, you can sell your home, and go rent for a while, but you will be doing so with cash in hand from the property that you buy now, and then into 3, 4, 5 years, if it so happens, we're not expecting it, but if we do happen to have a crash, if we do happen to see any kind of sign of that, and let's say, for example, you lose your job before the market crashes or whatever happens, right? You can make the right decision and say, you know what, family, and this happened to me, which is why I'm saying it. Back in 2008, I lost my job. That's when I had gotten into investing, and me and my wife was pregnant with our firstborn, and so I told her, we have all this money sitting in my 401k, we have money here, why not sell or refinance? We move in with your parents, but at least we have that cash. We're not gonna lose it if the economy continues to tank, because it's soft value, it's soft cash sitting in stocks and real estate, which is like stocks. It can go up and down at any given moment. So if once you get to the point, if we get to the point, you rest assured that is what the investors, the power players, are going to do. They're going to cash out and sit tight on a bit and go into like a safer investment. At that point, maybe even CDs from banks may be better. Sometimes the government incentivizes the spending and the influx of money to again accelerate us by giving those bonds or CDs at a higher return. So either way, the way you look at it, it doesn't matter. You may be wondering, why are investors still buying? Investors are the ones driving inflation, but it's not. It really isn't. Right now you have very little people looking for work, and for whatever reason, there seems to be a lot of money moving around. And the Fed, since they started late, now they have to act quick, act aggressively, and force that crash landing as they're talking about, as they keep mentioning. And that's by increasing the interest rates. If you're trying to buy a house, obviously what that means for you is that if you got into contract right now, you're probably set. But if you're looking to maybe wait a little longer, you think that you're waiting for the prices to go down, you may be in a worse position then, and maybe in a better position now to buy, especially if you're gonna finance, right? So the basis points are important for you to know as a buyer, but it's not something that should scare you or shy you away from investing for you and yourself, your family, or for your future foundation for investing in other properties. If you're looking to sell and you're thinking that is not the right time, my answer to you would be that that's on a case by case basis, honestly. You have to look into your finances. You have to look into the age of the property, how much more repairs you're expecting to have over the next coming years versus the return on investment that you're getting right now on a monthly, quarterly, annual basis, right? If you're making, let's say, $8,000 a year profit, right? That's your gross profit. But out of that, you're expecting $6,000 to be into possible rehab or upgrades or repairs in the next 2-3 years. Then you may be better off just getting rid of it. That the longevity, the lifespan of that asset, that investment, has most likely run its course, and it's better for you to turn it over to someone that can make it work under the new financial circumstances, especially if they happen to be buying cash. And that's what's happening a lot with the buyers. Um, but anyway, so basis points are important. They're 1/100th of an actual interest point. So 75 basis points is 0.75%, and it's expected to increase again another 0.75%. Um, and the goal is to make lending harder, which means that if you're looking to buy in the near future, even if you have a solid job, it's going to cost you a lot more to buy a house. Not because the prices go up, but because the interest rates are up. And so the although I keep saying that people, I've never heard a wealthy man saying that they got rich out of saving on a couple of points on interest. It does add up if you are looking to maybe buy a house for yourself and you're on a fixed income. Maybe you're making a little bit of above average wage, but you're in the besides that you're in the position to maybe buy a house. So if you're a typical person, like most of us, right now is your time to buy. It's you're a lot safer to if you buy a house right now than if you're renting. So anyway, don't shy away, don't scare because you're hearing all this chatter about increased rates, crash landings, economy getting worse, et cetera, et cetera. Those people that have a home, those of us that own a home will most likely, very high percentage, very likely to be okay, even if we have to, for example, soften our blow by selling a property or refinancing, et cetera. You have to look into buying a home and owning and home ownership as an investment. And anything that you do that has to do with real estate should be considered an investment. And if you are seeing investors buying houses left and right, there must be a reason, even if you don't know yet what that reason may be. Um, so, anyways, hope that helps. Hope it clarifies some things. If you have any questions, feel free to message me, call me. I'm always up for a beer, a soda, a drink, a baseball game. We can go hang out at a Starbucks and have lunch, etc. And then you can pick my brain as much as you can. Now, whether it's real estate, finance, economics, baseball, you name it, I'm game. But especially if you're looking to maybe sell a house, maybe buy, and you're not sure if your financial situation may be right at the moment, reach out to me, give me a call, and let's figure it out. Anyway, so that's it for today. See ya.